That's Vaibhav. I welcome all of you to today's session of Visual JForex, where we will be continuing our algorithm development work using the momentum indicator MOM. And this is the third and the final part of this algorithm development series, in which we are using this indicator to design and develop the efficient algorithm. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the prior session, I had carried out the instrument subscription, then the position amount was defined at 0. After that, these blocks of varying time periods were brought in, and along with that, we are also relying on the get historical candle blocks to look at the price volatility. These calculation expression blocks have been used to define certain minimum requirements, and after that, once we were done with the defining of the conditions for the execution of the buy trade, these target price and stop loss valuations were carried out to keep the stop loss and target price dynamic depending on the actual price difference between the last 15 minutes candle close and candle open. On the lower side, this buy side is complete. Now this session is going to be dedicated to the development of the sell side. So let us get started. I will give you the brief idea of what are the requirements for the execution of the sell trade. For that, we will have to go to the JForex platform. This is the USD chart, which I will change to Euro USD. So this is the Euro USD chart, and as you can see, we have this Euro USD. We trading with increased volatility after yesterday's inflation data, and even during such volatile times, we can rely on our momentum indicator algorithm to safely find us the profitable trade. All we have to do is look at the momentum indicator values, whether it is below zero or above zero. And now that this session is focused on the building of the sales side requirement, I will only talk about the times when this algorithm is going to find us the opportunities to go short. For that, the first requirement is that we need last couple of hours of MOM values below zero. And for that, we are taking into consideration the last hour's MOM indicator value and also the value 3 hours back on the hourly time period, and those values should be on decline. So as soon as the momentum starts to shift and the MM value starts to rise, the algorithm will stop looking for the sell trade opportunity. And once these conditions are in place, we shift our focus to the lower time frame charting of the 15 minutes. On the 15 minutes, we want the sell trade to be initiated whenever we have some sort of retracement in place for the MOM value, and after a brief rise, the MOM value again starts to dip. So whenever we have that kind of formation, we will be looking to initiate the sell trade. So that's how this algorithm is going to work. So we now come back to the Visual JForex board, and for this session we have this calculation in place where we have taken into consideration last 15 minutes candle open and candle close difference, and as we need the momentum to be on the bearish side, so we need the last 15-minute candles closing value below the opening value, and the difference should be more than 5 bits, which we have defined here. So this is going to be one of the crucial conditions. And with that, we want to compare these out 14, out 18 values, whether these values are below zero and whether these values are on decline or not. So for that, we will have to now start defining the conditions which are necessary for execution of the trade, we want the sell side to be symmetric with the buy side. It should be kind of a mirror image. All the conditions which are there for the buy side should be here in the inverted format. For the execution of the sell trade, we need the output in value below 0. So in this case, first input less than second input. First input less than second input, okay. And also the momentum output 3 hours back, that value should also be below 0. So again, first input less than second input, and the last hour momentum output should be less than the output 3 hours back. So here again we need first input less than second input. After that we need the 15-minute momentum output value to start declining after having risen recently. So that will give us the idea that there has been some retracement, and now the bears are again trying to take charge. So here out 19, out 20, out 21, these three values will need to be compared in between, and that's how we are going to define this algorithm. And last 15 minutes momentum output should be below 0. Since we have other block in place which is already connected, I will define these values also. And our 20, which was the momentum indicator output value half an hour back, as it has a shift value of 3, it should be above our 21. So in this case, first input greater than second input. And in this case, first input should be less than second input. Alright. Then we shift our attention to the requirement that there should be enough of price momentum. So we want to compare last 15 minutes candle open and candle close difference, and they should be greater than at least 5 pips. So I will join it here. First input greater than second input, and after this we need to make sure that the trade is executed whenever we see that the price for the underlying instrument, in this case USD, is dropping below the last 15-minute candle close. So we have to compare the closing values for candle 23, candle 24, and candle 25. Candle 23 close will be the common value here. Candle 23rd has the lookback period of 1, with the candle period defined as 15 minutes. And we want candle 25th to have closed on the higher side as it has look back period of 2, and after that the last 10-second candle needs to have closed below the candle 23rd. Candle 25th, it was on the higher side, first input greater than second input, and candle 24, candle close is on the lower side. So in this case, it is going to be first input less than second input. We will arrange these blocks, and then we will have to start defining the parameters for the execution of the open at market block for the sale trade. As was the case with the buy trade, we will keep the stop loss and the target price dynamic. This needs to be changed to sell. Trade amount I will keep at 0.1 million. Default instrument will remain as it is. Slippage will be changed to 2 pips. Stop loss and target price needs to be defined afresh. For that, I will create the variables and we will assign them to the calculation expression block, which we will have to bring in. So here we will name it as SL, and this as SPP. And now we have to carry out the calculations to assign these variables as the output for these two calculation expression blocks. We will take this difference SPD and multiply it with the pip conversion factor, which is 10 raised to the power 4. So we will have the stop loss, which will be equivalent to the last 15 minutes candle open and candle closing difference, and take profit will be twice of it. A1 into A2, and the value here is going to be defined using this variable. So output value, whatever it will be assigned as the stop loss, and stop loss will be multiplied by 2. BT, it has the value of 2, so we will use this variable. It is going to be A1 into A3, and this will be the output value. Okay. So we have now completed the algorithms, both sides, the execution for the both side trades buy as well as sell will happen whenever we see that the conditions are in place as per the logic of the algorithm. And with this, the session is also coming to an end. I hope you have been able to understand the logic and functional aspects of this algorithm using the momentum indicator, and hopefully you will be able to design the algorithm maybe similar or some variant of it on your own JForex platform using this tutorial. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.